Hey everyone, welcome to our channel. Before we dive in, please subscribe to our newsletter, like this essay, and share it with your friends. Your support helps us reach more aspiring entrepreneurs like you. Ready? Let's go. Let's talk banks. What are they? Banks are like financial stores. You can save money, borrow money, and do other money stuff. They're important because they keep our money safe and help our economy grow. Think of it like this. You deposit your paycheck into your bank account. The bank then uses that money to make loans to other people and businesses. It's a cycle that keeps money moving. Banks offer a bunch of different services. These include deposit accounts, loans, and investments. They can also help with things like paying bills and transferring money. Knowing how banks work is the first step to taking control of your money. Not all banks are created equal. Each bank has its own unique set of services, benefits, and drawbacks. Just like there are different types of stores catering to various needs, there are different types of banks designed to serve different financial purposes. Each one has its own personality, focus, and way of doing business. Understanding these differences can help you choose the right bank for your needs. First up, we've got commercial banks. These are the big players in the banking world, often with a national or even international presence. They offer a wide range of services to both individuals and businesses, making them a one-stop shop for many financial needs. From checking and savings accounts to loans, credit cards, and investment services, commercial banks provide a comprehensive suite of financial products. Think of them as the department stores of the banking world, offering everything from basic checking accounts to complex financial planning. Then there are savings banks. These institutions have a more focused mission. Their main focus is helping people save money, often offering higher interest rates on savings accounts to encourage this. They might offer higher interest rates on savings accounts, making them a good choice if your primary goal is to grow your savings. Credit unions are different. They're owned by their members, and they often offer better rates and lower fees. This member-focused approach can result in more personalized service. It's like a big financial family. Credit unions are known for their community-oriented approach and often provide educational resources to help members manage their finances. And finally, we've got the newcomers, online banks. These banks operate entirely online without physical branches. They operate entirely online, which can mean lower overhead costs and better rates for you. Online banks are perfect for tech-savvy individuals who prefer managing their finances digitally. With features like 24/7 access, mobile apps, and often superior interest rates on savings accounts, online banks are revolutionizing the way we think about banking. So, where do you fit in? Understanding the different types of banks can help you make an informed decision about where to manage your money. Whether you prefer the comprehensive services of a commercial bank, the savings focus of a savings bank, the community feel of a credit union, or the convenience of an online bank, there's a perfect fit out there for you. Let's dive into the world of banking products and services. Banks offer a variety of accounts and services to help you manage your money effectively and efficiently. Whether you're looking to save for the future, manage your daily expenses, or invest your money, there's something for everyone. Think of these as your financial tools. Just like a carpenter needs a hammer and nails, you need the right accounts and services to build your financial future. First, we have checking accounts. These are essential for managing your day-to-day finances. This is where you deposit your paycheck and pay your bills from. Checking accounts often come with a debit card, which you can use for purchases and ATM withdrawals. It's your everyday money hub. With a checking account, you can easily access your money whenever you need it. Next, we have savings accounts. These are designed to help you save money over time. This is where you stash your cash for a rainy day, a big purchase, or long-term goals. Savings accounts typically offer interest, so your money can grow while it's sitting in the bank. Then there are certificates of deposit, or CDs. These are a great option if you want to earn a higher interest rate and don't need immediate access to your money. These are like time capsules for your money. You agree to leave your money in the bank for a set period of time, and in return, you get a higher interest rate. You lock in a fixed interest rate for a set period of time. This can be a great way to ensure your money grows steadily. Money market accounts are like a hybrid of checking and savings. They offer the best of both worlds. They typically offer higher interest rates than regular savings accounts, but you might have limited withdrawals. This makes them a good option for those who want to earn more interest, but still need some access to their fund. And don't forget about online banking, mobile banking, and ATMs. These tools make it easy to manage your money from anywhere. These are convenient ways to manage your money on the go. Whether you're traveling, at work, or at home, you can access your accounts, transfer money, and pay bills with just a few clicks or taps. Banking has never been more accessible or convenient. Banks are businesses, and businesses like to make money. One way they do this is through fees. Overdraft fees are the worst. They happen when you spend more money than you have in your checking account. Monthly maintenance fees are like rent for your account. Some banks charge them just for keeping your money there. ATM fees can sneak up on you if you use an ATM that's not in your bank's network. And then there are wire transfer fees. These can be hefty, so it's important to compare prices before you send money electronically. The good news is that many banks offer ways to avoid or minimize these fees. Be sure to read the fine print and ask questions. Section 5. Making your money grow interest in APY. Let's talk about interest. Interest is like a reward you get for keeping your money in a savings account or CD. It's a percentage of your balance that the bank pays you over time. APY stands for annual percentage yield. It's like interest, but it takes into account how often the interest is compounded or added to your balance. The higher the interest rate or APY, the more your money will grow. It's like magic, but with math. Understanding interest rates is crucial for both saving and borrowing money. Section 6. Your credit score, what it is, and why it matters. Your credit score is like your financial GPA. It's a 3-digit number that represents your creditworthiness, or how likely you are to repay borrowed money responsibly. Banks and other lenders use your credit score to decide whether to approve you for loans and credit cards. And if they do approve you, your credit score can affect the interest rates and terms you're offered. A good credit score can save you thousands of dollars in interest over your lifetime, so it pays to keep it in tip-top shape. You can get a free copy of your credit report from each of the 3 major credit bureaus every year. Check it for errors and make sure everything is accurate. Section 7. Loans from want to need. Sometimes we need to borrow money, whether it's to buy a car, a house, or to cover an unexpected expense. Personal loans are like all-purpose loans. You can use them for just about anything. Auto loans are specifically for buying a car. Mortgages are for buying a house. This is likely the biggest loan you'll ever take out. Credit cards are like short-term loans that you can use over and over again. When you apply for a loan, the lender will look at your credit score, your income, and other factors to decide whether to approve you. They'll also determine your interest rate and repayment terms. It's important to borrow responsibly and only take on debt that you can afford to repay. Section 8. Banking safety net, regulations, and consumer protections. In today's complex financial world, it's crucial to understand the safeguards in place to protect your hard-earned money. Don't worry, the government has your back. Various regulations and consumer protections are designed to ensure that your interactions with banks are secure and transparent. There are laws in place to protect you and your money when you're dealing with banks. These laws are designed to create a fair and trustworthy banking environment, giving you peace of mind. The FDIC, or Federal Deposit Insurance Corporation, insures your deposits up to $250,000 per depositor per insured bank. This means that even in the unlikely event of a bank failure, your money is protected. So even if your bank goes belly up, your money is safe. This insurance is a critical component of the banking safety net, providing a layer of security for consumers. The Truth in Savings Act requires banks to disclose the terms and fees associated with their deposit accounts. No more hidden surprises. This transparency helps you make informed decisions about where to keep your money. The Electronic Fund Transfer Act protects you from unauthorized electronic fund transfers, like if someone steals your debit card information. This act ensures that you are not held liable for fraudulent transactions, giving you confidence in using electronic banking services. And the Fair Credit Reporting Act gives you rights when it comes to your credit report. This act ensures that the information in your credit report is accurate and used fairly, allowing you to maintain a healthy credit score. These regulations are like a safety net for consumers. They provide a foundation of trust and security, allowing you to navigate the banking world with confidence. Understanding these protections can empower you to make better financial decisions and feel secure in your banking relationships. Section 9. Money Mastery Tips for a Healthy Financial Life. Ready to become a money master? Here are a few tips to get you started. First, create a budget. This will help you track your income and expenses so you can see where your money is going. Second, Make saving a habit. Automate your savings so you don't even have to think about it. Third, avoid debt like the plague. If you do have debt, make a plan to pay it off as quickly as possible. And finally, educate yourself about personal finance. The more you know, the better equipped you'll be to make sound financial decisions. Remember, financial literacy is not a destination, it's a journey. Section 10, Banking of the Future, What's Next? The banking industry is constantly evolving. Here are a few trends to keep an eye on. Digital transformation is changing the way we bank. Mobile banking apps, online account opening, and contactless payments are becoming the norm. Fintech, or financial technology, is disrupting traditional banking models. Think peer-to-peer payment apps, robo-advisors, and blockchain technology. Sustainable banking is gaining traction as consumers become more environmentally and socially conscious. These trends are shaping the future of banking and creating new opportunities for consumers. Section 11. In conclusion, banking is an essential part of our financial lives. By understanding the basics of banking, you can make informed decisions about your money and achieve your financial goals. Remember to choose your banking products and services wisely, be aware of fees, protect your credit, and stay informed about emerging trends. With a little knowledge and effort, you can take control of your finances and build a brighter financial future. Thanks for watching. If you enjoyed this video, make sure to subscribe to our channel, like, and share.